Hello traders, Gary Wagner here at just about 1 o'clock in Honolulu, 6 o'clock in New York. It is Tuesday, first day of December 2020, and this is the Daily Report for Gold and Silver. Phenomenal news out of the administration and legislation today in that there have been a bipartisan proposal of a fiscal stimulus bill that is intended to be enacted prior to the inauguration of Joe Biden. If that actually comes to pass, a couple of things could occur from that. One, we would see gold rally. That's going to add a tremendous amount to the budget deficit. Secondly, we would see U.S. equities continue to rise. Third, we would see some downside pressure on the dollar. But that's if it's passed, and the if is a big question. We'll talk about that during the show, and also some of the technical indicators that are really pointing towards a possibility of a key reversal. But first, let's take a look at current pricing. The surprise announcement that a bipartisan proposal has been presented to the legislature for approval of an additional stimulus package amounting to $908 billion. Of course, it still needs to be agreed upon and passed, but it is the first step to having fiscal stimulus come to those in need prior to the end of the year. Gold reacted very solidly, gaining over 2%, $37.40, currently bid at $18.30. When we look at spot gold, that also had a significant gain today. The gain on that was $37, $18.14.50, let's call it. Silver had the greatest gain on the day, $24.12 after a $1.52 gain. That's almost a 7% gain on the day, and that was all aided with a lower dollar at 91.18. Although one day does not guarantee a key reversal would contain the elements that we are seeing today. First, on a fundamental basis, a major news event, the proposal of additional stimulus amounting to just shy of $1 trillion, $908 billion, was proposed today. It is a bipartisan bill that now has to go through the legislature and then get implemented if possible. And there's really three things that I'm noticing. The first thing is we talked about various levels of potential support in the market. We talked about the fact that over the last couple of trading days, we have seen lows that have kind of touched upon, but not closed below. We can really see that when we go ahead and enlarge this chart, which I've just done, that on only one occasion did we actually dip below that particular price point, and that was yesterday. Today we had a higher open, and the day before that, the low matched almost precisely with the 50% retracement level. That's number one. Number two is the identification of a candlestick pattern that is simply called an engulfing bullish. An engulfing bullish is a 2-day pattern which requires 3 steps or 3 criteria to be valid. The first one is that you have had to have been in a defined downtrend. We can absolutely say that that has been met. Secondly, you get a small red candle that is completely engulfed by the body of the green candle. And the larger the green candle, the stronger the signal. And traders, the last thing that we would want to see is the fact that on tomorrow's candle, we get a confirming candle, which would mean that it would be a green candle. In other words, it closes above its open. It would contain a higher low and a higher high than the previous candle. And then lastly, and I believe most importantly, we broke through and closed solidly above the 200-day moving average. And that, to me, is absolutely significant. When we combine all of these factors, the fact that we found support at the 50% retracement, we identified a pivot or candlestick pattern that could indicate higher pricing, and the close was above the 200-day moving average, That to me signals the defined possibility that we could see higher pricing in gold. There's a caveat to that. And the caveat is this is strictly a fundamentally based event. If stimulus is passed, then we will see gold move much higher. I absolutely believe that because that's going to devalue the dollar. As you can see, the dollar was devalued by about 0.75% just on the possibility. Based upon that, if we see fiscal stimulus enacted prior to the end of the year or prior to even the inauguration, that would be a great boost for gold, a great inhibitor of dollar strength, taking that lower, and we could see a return to rally mode. But the question is whether or not the legislation will be able to come to an agreement, because we know that there has been an impasse for so long. But nonetheless, this is great news. Traders, we are looking at the most active contract of silver futures. That closed up an amazing 6.76%, almost 7% on the day. The net gain was about $1.50, currently trading at $24.12. There have been some key differences when we look at gold and compare that to silver. First of all, we never broke through the 200-day moving average in silver. We didn't even come close. We did get that cross between the 50-day in green and the 100-day in blue, but that could easily be short-lived if we see this market begin to pick up steam. We have the added advantage with silver in that we had a dynamic stock market today. The S&P gained 1.13%, NASDAQ 1.28%. So we really saw this market move to higher ground, speaking about equities. And because silver is highly used in industry, we could easily see it outperform gold in terms of percentage gains to the upside. If in fact we see it continue to move, the next thing that we need to see in terms of a confirmation is going to be a close effectively above the 50-day moving average. Another thing that is noteworthy is that we do identify a candlestick pattern, and it really is a variation on a candlestick pattern. It is a variation of a three-river morning star. Now, on the three-river morning star, the criteria to have to come after a defined downtrend, it begins with a red candle, that is this one, and then you get a star. The star is simply a small-bodied candle that gaps below the opening price of the red candle. And that's where the variation comes in, because as you can see, it really opened within the confines or the lower part of the body. But you did get that sizable uptick with the green candle. Assuming that we continue to see this market move up, as I said, the first thing that I want to look at is an effective close above the 50-day moving average. I'd like to see it move towards the 100-day moving average, and if that is the case, I would put resistance at $25.73 to $26 per ounce. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. If we do get confirming candles, we would issue a trade alert to signal the entry of long positions in both gold and silver. That would go out with SMS text message along with a special email that always has the subject title Trade Alert in capital letters. Have a great day. Bye-bye.